Hey everyone, welcome back to Corporate Decoder. Today, AMG Funds IV just filed their Semi Annual Shareholder Report for the 30th of April 2026, and I am digging into the numbers to see what is really going on. Quick note, this is not financial advice, just my take on public filings for educational purposes. Essentially, we are getting a look under the hood at how several different investment funds managed by AMG have been performing over the last 6 months. The filing really covers a lot of ground, detailing the financial state of various funds within the AMG Funds family. Each fund has its own class of shares, like Class N, Class I, and Class Z, and the report breaks down performance and holdings for each. Let's start with the AMG GW&K Small Cap Growth Fund. As of the 30th of April 2026, this fund had total net assets of over $207 million. That sounds like a lot of money, and it is, but it is spread across 81 different holdings in the portfolio. The portfolio turnover rate was 111%, which means they bought and sold more than their entire portfolio value within the period. This is quite high and suggests active trading, which can rack up costs. Looking at the top holdings, Advanced Energy Industries Inc. was a significant part of the portfolio at 3.8%, followed by Powell Industries Inc. at 3.1%. These top 10 holdings together made up about 26.6% of the fund's net assets. In terms of expenses, for a hypothetical $10,000 investment in Class N shares, the costs over the last 6 months were around $47, which is about 0.90% of the investment. While it is not the most expensive fund, it is certainly not the cheapest either. Next up is the AMG GW&K Small Mid Cap Growth Fund. This fund had net assets of around $41.6 million, holding 85 different investments. Interestingly, the net advisory fees paid across all share classes totaled over $74,000. For Class N shareholders of this fund, a $10,000 investment cost about $54 in fees, representing 1.03% of the investment. This is slightly higher than the Small Cap Growth Fund, and it tells us that even within the same management company, fees can vary significantly depending on the specific fund and share class. Now let's shift gears to the AMG River Road Dividend All Cap Value Fund. This fund is quite a bit larger, with net assets nearing $69 million. It holds 66 investments, and the portfolio turnover rate was 23%. The top holdings here include names like Royalty Pharma plc Class A at 3.6%, and the Williams Companies Inc., and the PNC Financial Services Group Inc., both at 3.5%. These top 10 holdings alone accounted for about 28.1% of the fund's total assets. For Class N investors, a $10,000 investment would have incurred about $51 in costs, or 0.97%. This is a bit more expensive than the previously discussed funds. Moving on to the AMG River Road Small Cap Value Fund. This is a much larger fund with net assets exceeding $1 billion. It holds 64 different investments and had a portfolio turnover rate of 16%. The net advisory fees paid for this fund were substantial, over $4.2 million. This is expected given the fund's size. Breaking down the costs for Class N investors, a $10,000 investment cost around $69, which is 1.35% of the investment. This is the highest expense ratio we've seen so far, highlighting how fees can impact returns, especially for smaller or more concentrated funds. Next, the AMG River Road Small Mid Cap Value Fund has net assets of over $329 million and holds 78 investments. The net advisory fees here were over $1.2 million. For Class N investors in this fund, the costs for a $10,000 investment were about $65, representing 1.28%. This is a significant expense, making it important for investors to pay close attention to these fees. Switching to the fixed income side, we have the AMG GW&K Core Bond ESG Fund. This fund has investments totaling over $103 million. The schedule of portfolio investments shows a diverse range of corporate bonds and notes, accounting for 45.5% of the fund. Within the corporate bonds, we see holdings in various sectors like basic materials, communications, consumer cyclical, and financials. Interestingly, there is a significant portion in financials at 17.2%, which includes companies like Bank of America Corp. And JPM Chase & Company. The fund also holds us government and agency obligations, making up 40% of its assets. This includes investments in Fannie Mae and Freddie Mac. Looking at the valuation breakdown, all of these investments fall into level 1 or level 2 of the fair value hierarchy, meaning their values are mostly based on observable market prices. This is a good sign for transparency and stability in valuation. The financial statements reveal a net increase in net assets from operations for the 6 months ended the 30th of April 2026. For the Core Bond ESG Fund, it was around $281,000. For the small cap growth fund, it was a healthy $16 million, and for the small pointed cap growth fund, it was about $4.3 million. However, we also see significant capital share transactions. The small cap growth fund saw a net decrease in shares outstanding during the period, while the small mid cap growth fund had a substantial increase in shares. This can impact NAV per S-share and overall fund performance. When we look at the notes to financial statements, they provide crucial details. For instance, the valuation of investments is based on independent market quotations, or, if those aren't available, fair value estimations. This is important for understanding how the fund's assets are valued. There is also a section on agreements and transactions with affiliates which talks about the fees paid to the investment manager and sub-advisor. For the small cap growth fund, the management fee rate changed from 0.48% to 0.47%, alongside expense cap reductions, which is generally a positive sign for investors. This is a good example of fund companies adjusting fees to remain competitive. The report also details fund risks. We see standard risks like credit risk, interest rate risk, and market risk, but also specific ones like ESG investing risk and non-diversified fund risk for certain funds. It is always wise to understand these risks before investing. The financial highlights tables give us a per share view of performance for the A.M.G. GW&K Small Cap Growth Fund Class N. The total return for the 6 months was positive at 8.52%. However, the ratio of net expenses to average net assets is 0.88%, which is on the higher side for a fund like this. This means a good chunk of the returns are eaten up by fees. The portfolio turnover for the small cap growth fund was 111%, indicating a very active trading strategy. While this can sometimes lead to outperformance, it also means higher transaction costs and potentially higher tax implications for investors. When I look at AMG Funds IV, and specifically these semi-annual reports, what stands out is the sheer diversity of funds and classes offered. The financials clearly show performance differences, expense ratios, and portfolio compositions that can vary greatly. For investors, it is crucial to not just look at the fund name, but to dive into the specific class and its associated costs and holdings. The shift in sub-advisor and strategy for the small cap growth fund is also a key event to watch, as it could significantly alter future performance. The risk I am watching is whether the active trading strategies will consistently outperform despite higher expenses and turnover. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Check out the Discord in the description.